Another big mover, Ralph Lauren. The stock rallying to a record high today after the company beat earnings and revenue expectations and raised its full-year guidance. That's thanks to strong performance over the holiday season with strength across all of its geographies. The next hurdle for retailers, of course, is tariffs. But Ralph Lauren has been diversifying its sourcing over the past 7 years, with China now only accounting for low to mid-single digits of its sourcing. Joining us now to talk about all of this is Ralph Lauren CEO Patrice Louvet. Great to see you here at Post 9.
Good morning, Sarah.
Welcome. It is a good morning for you and your shareholders. You know, what's happening? Is this luxury doing well, or is it Ralph Lauren specific?
Yeah, this was a high-quality quarter for us. You saw top line up 11%, comps 12%, growth across every region, right? U.S. up 7%, Europe and Asia mid-teens. I think what we're seeing is our core consumer is resilient in an environment that stays pretty volatile. And the proposition and the strategy that we've had in place now for a number of years is resonating. And honestly, this is the outcome of the cumulative effect of the implementation of this multi-levered strategy over the past few years.
And when I think of that strategy, as someone who's been covering and talking to you every quarter, it's a lot of it is just elevating the brand, right? Shrinking the number of wholesale outlets that you sell to and keeping everything just in a more luxurious place. Is that how you describe
you're
it?
Absolutely, that's part of it. It's a really three-pronged. One is elevate and energize the brand. So it's things like the partnership that we had with the U.S. Olympic team this summer, or the Very Ralph documentary that we launched in China in this past quarter. It's also drive the core and expand for more. So drive the core from a product standpoint. You're familiar with the core Ralph Lauren products: cable knit sweaters, caps, blazers, Oxford shirts. And then expand for more from a category standpoint is women's apparel, handbags, outerwear. And this quarter, those categories were up 20% for us. So they're playing their role as an accelerator. The third element of the strategy is our key city ecosystem.
Geography.
So we focus on top 30 cities, and we build this ecosystem that has a combination of our own stores, which we're expanding, as you know, digital surround sound, and then quality wholesale. The combination of these three strategies across the regions is what's delivering these results.
What does it say about China?
Well, listen, China up 20% again this quarter for us. We were strong last quarter. We've actually been on a run for multiple years in China. What we are seeing is the Chinese consumer our core consumer is resilient. We're able to recruit a lot of younger consumers, next generation. And I think while we know the context is complicated for Chinese consumers, right? Whether that's consumer confidence, youth unemployment,
right,
or the real estate situation, I think what we're seeing is the strategy that I mentioned earlier is playing out, which is we are driving brand momentum and brand engagement with our activations. I mentioned earlier the Very Ralph documentary. We had a really nice Singles Day activation where for us it's about consumer engagement. It's not about driving volume. The product engagement is similar to what we're seeing globally. So our consumers in China are buying our most elevated products. So we're excited about that and what it represents for the future. And then I think differently from many companies in our space, we're very focused from a go-to-market standpoint. 6 key cities: Shenzhen, Chengdu, Shanghai, Beijing, Hong Kong, Taipei. We could go much broader, but we want to stay focused. We want to build these ecosystems in a way that we're really engaging with the consumer across the key points that matter for them, but also means we have a lot of runway. So, Carl, what does it mean for China? I think for us, China has got significant mid- and long-term potential. It's only 8% of the business today for us. It was 3% 5 years ago, so we're making good progress, but there's still significant runway.
What if the trade tensions get worse? Already we have an elevated 10% tariff now on goods coming from China.
Yeah, so this is not a new phenomenon, right? We've navigated this volatility in the past. As you mentioned in your opening remarks, we have worked really hard to diversify our supply chain, which was very dependent on very few markets many years back. So we now have the combination of the diversification of supply chain and an agility muscle that this company has built that allows us to navigate this, I think pretty effectively.
Where have you gone? Vietnam? I'm just wondering, because if we get universal tariffs, that could be a risk for all of retail,
universal tariffs
right?
will be a little more challenging. But we have gone both in other markets in Asia, so think Vietnam, think Malaysia. We've also, as part of our strategy, has been nearshoring, right? So in Europe, think Turkey to serve Europe or some of the Eastern European markets. Obviously, we have big business in Italy that is serving the luxury parts of our business. In the U.S., we have production in the U.S., Purple Label collection. The high end is manufactured here. Obviously, our Olympic uniforms are manufactured in the U.S., and then we've got nearshoring in Latin America to serve the U.S. market. So it goes to this diversification point, which is we really make sure we're not dependent one specific supplier, one specific market, but able to navigate and stay agile.